Hi, I'm Jonathan Small from Global Ag Risk Solutions, and I'm going to talk to you about gross margin insurance. Have you ever tried to swing and hit a baseball with one eye shut or a patch over your eye? If you ever have, you know how difficult it is to hit that ball, much less get that home run that you really want. We all know that actually looking at that ball with both eyes wide open and staying focused on that gives you a much greater chance of hitting the home run. And farming is no different, and managing risk in your farm is no different. You need to manage it in all three dimensions. You need that 3D vision. And the thing about gross margin insurance is it does exactly that. So let's just compare crop insurance to gross margin insurance. They're really not the same thing, but they tend to get compared. So crop insurance only covers the easiest part, the yield. Price is set by the insurer, but there's some options available which gets you some flexibility. And of course, expenses are not covered at all. Meanwhile, gross margin insurance covers all three parts and, of course, all of the critical interactions between them. It's built to do that. So as you spend more inputs in season, your coverage rises at no extra cost. The effect of that is that it changes the way that you think. What we found is that clients who use gross margin insurance actually start to farm differently. They spend significantly more on inputs on their crops, and they get significant benefit from doing that. Their gross margins actually increase, and they increase by enough not only to offset the premiums that they've paid for that gross margin insurance, but it happens every year, whether they claim or not. And so the truly unique thing about gross margin insurance is, for the first time, it's a win-win. You make money in the years in between claims, and we've got your back in the years when there is a claim. And it truly and profoundly changes the way that crops get managed and farmers' attitude towards using those inputs, which they know can work. The farmer who has crop insurance, of course, thinks about it differently. He'll walk away from crops periodically. He'll make negative or conservative decisions, whether that be about inputs or about marketing, in fact. And as a result of that, it's kind of a lose-lose situation for those guys. They leave gross margin on the table each and every year. They're actually poorer over the course of 5 or 10 years or a lifetime of doing that, because they're ever so slightly defensive, or they're a lot defensive in their attitude towards farming, and we see a profound difference between those farms over the course of a lifetime. So remember, gross margin insurance is a win-win. Crop insurance can be a lose-lose. Farm your crop, not the program. Farm for profit, not for defense.